Well, hi guys. Welcome to this Moneycontrol live stream. You're watching Midday Market Mood Check with me, Nandita Khemka. Well, Yatin is away for a break today, but so I thought I'll just come in and get in a guest with me today to take us through, what to expect from some of the stocks that are moving in today's session. But before I go to the guest, let me talk about, the markets are doing at the current juncture. Well, a good Friday today, given the fact that the Nifty is up by about, 70 points or thereabouts. It's trying to reclaim that 19,500 mark, but it looks like this level is emerging as a key or as a very stiff resistance for the Nifty. Looking at the Sensex up to 30 points or thereabouts, mid and small cap indices rebound from yesterday. In fact, trying to participate in today's rally, 0.5% gains coming in on the Midcap index. When you look at the other sectoral movers, of course, IT hands down, that's the top gainer today as well. Yesterday, remember that index was up somewhere around 2%, and even today it's up 2.5% or thereabouts. Look at the Nifty gainers. Four out of top five gainers on the Nifty is from the IT basket. Tech Mahindra up 3.5%. TCS up 3.5%. Infosys, HCL Tech, in fact, even Wipro, despite the disappointing show in the first quarter, is among the top gainers on the Nifty. Well, disappointing guidance from Wipro yesterday, but it wasn't as gloomy as the street was expecting. So brokerages have maintained their underweight rating. But the fact that the guidance is better than what was being expected, and the demand environment doesn't seem to be that gloomy. And that's obvious from the kind of commentary that is coming from TCS and HCL Tech. So that is something that is triggering a sharp rally on the IT basket. We'll be talking about the IT stocks with Ajit shortly, but let's talk about some other movers then. On the Nifty, some of the metal counters are doing well. So Hindalco, you have Tata Consumer, Hero Moto, Divi's Lab, Tata Steel, UPL, all of these counters doing well. UPL, mind you, had hit a fresh 52-week low in yesterday's session, trying to make a comeback. And on the losing end, you have the likes of HDFC Life. This stock was gaining, in fact, for the last four sessions. It has snapped a four-day gaining streak. You have Titan, Axis Bank, Power Grid, and M&M among the key losers on the Nifty. From the mid-cap end, if you look at JBM Auto, that stock is, hitting a fresh 52-week high as it has one order to supply somewhere around 5,000 electric buses. On the back of that, of course, stock is up somewhere around 11% or thereabouts. You have Delta Corp making a comeback after, of course, a 28 to 30% downtick that had crash that it saw over the last 2-3 sessions. So lots of movers, but let me also bring on board Ajit Mishra of Religare Broking is joining in this afternoon to take us through what levels to watch out for on the index, and of course talk about some of the stocks that are buzzing in today's session. Good afternoon, Ajit. Thanks a lot for joining in. 19,500 emerging as a stiff resistance. Would you expect the Nifty to maintain that or cross that level decisively in the coming sessions, or do you think it will remain elusive for some time?
Yeah, good afternoon, Nandita. So, Nandita, see, it's a healthy consolidation that we are seeing for almost a week now. That the move from 18,600 to 18,500 was almost vertical. We hardly had any day wherein market took a pause. So, it's a healthy consolidation that we are seeing. Another aspect is that almost all the sectors are contributing to the move on the rotational basis, which is helping the index to cap the damage when it comes to this overall consolidation. It's a more of like a time-wise correction that we are seeing in the market, and it's healthy. At the same time, not only the domestic factors, but the upbeat global clues, especially from the US markets, are also having positive impact. So I believe that post this consolidation, because 19,300 to 19,550 is broadly the range that we are trading in. And from the last couple of sessions, we are forming higher lows. So this indicates that yes, soon they want to end this consolidation. Yesterday we made an attempt in the early trade taking views from the global market, but we couldn't sustain. So I feel that in case if we spend at least a couple of sessions more around the current levels and then make a move towards a newer high, that would be a more sustainable move that market may have. So as of now, yes, it's a buy on dip market as long as we are holding above 9,300.
All right, a buy on dip market and a healthy consolidation playing out in the market at the current juncture. But let's talk about the large cap IT basket. Of course, the street was factoring in, muted to a weakish set of numbers for the first quarter, and that's exactly what has happened. But for the likes of HCL Tech and Wipro, they haven't really been, they've actually been worse than what was being expected. How would you play some of these IT stocks after the first quarter earnings? Infosys is yet to report, but it's participating in a healthy rally that has come in. Looks like a lot of people are buying into the into the story and wait and attempting to wait for the long term once the recovery kicks in. Ajit, can you hear me?
Yes, now I can hear you. So, yes, Nandita. So, when it comes to IT, is the only sector as of now which is down nearly 25% from the record highs. And we all had all those things that negativity around the earnings and other factors which are playing out. But if you notice that the Nasdaq Composite, which is a tech heavy index from the US, that was having a good time, and we were seeing decent recovery in the US market. So now I feel that with after this recent result from the IT majors like HCL, TCS, Wipro, uh, we are seeing that market is somehow anticipating that this consolidation or the negativity that we were having for almost 1.5 years in the IT pack, that should subside in months to come. So that's why we are seeing this recovery across the IT majors and TCS, HCL Tech, in fact Wipro, Tech from the Midcap IT, Birla. So these are the names which are buzzing, and we believe that in case if we manage to hold let's say 3400 mark in the TCS, then this move should extend and we can reach towards 3550. Similarly, we are seeing Infosys from the IT majors, wherein the stock has surpassed the long-term averages around 1400, 1395 levels. In case if it manages to hold, then yes, 1440, 1450. But still, it's a recovery. It's not that the trend has reversed completely. So we need sustainability of the move. Comparatively, this mid-cap IT baskets, they are looking more concrete. So persistent, there was hardly any correction. Stock is still trading around the record highs. Then we have Birla Soft, wherein we are seeing higher base formation and follow-up move. And Tech Mahindra, wherein we have seen a very major consolidation range breakout. So be selective in this phase. Don't go overboard. Yes, we are playing this recovery, but keep on trading your stop losses, especially if you are trading, IT back.
All right, keep stop losses, especially when you treat some of these large cap and mid cap IT stocks. But let's talk about LTI Mindtree. It has just made an entry into the coveted Nifty 50 club. Has hit a fresh 52-week high as well. How would you advise investors to look at this? I mean, should one buy into it now and hold for the long term?
See, it's almost 1.5 years now, Nanta, that the stock has been hovering in this band close to around 5,000 and downside around 40, 50, 40, 4,000 levels. We are trading closer to the upper band. It had made an attempt of late, to surpass the same, but couldn't sustain. But this time around, after this dip, we are seeing this, the stock managed to hold the short-term averages and the previous consolidation low also close to 1,400 mark. So yes, it looks positive, and since we are seeing traction across the IT majors, we can expect this rebound to extend, and the stock may witness a move towards 54, 5500 levels also. So with stop at 4900, one can make an attempt of fresh buying at current levels for the target of around 53 to 5400.
All right, let's take up some queries that are trickling in on our live feed. Sivaji Raji wants to know your thoughts on BEL. Now, we all know that defense stocks have been on a tear, especially the likes of Mazgaon Dock and even the shipbuilding companies like Coaching Shipyard and all. But today, of course, Mazgaon Dock has come it's correcting a bit. But for somebody who's holding these defense stocks, should they book partial profits right now, or should they continue to hold and wait for further upside to maybe book profits later?
So yes, the entire basket is still buzzing, and we are not seeing any major sign of exhaustion yet. And the stocks, majority of the stocks are holding over the short-term averages. That clearly indicates that momentum is in place. So similarly for BEL also, the stock after the recent consolidation had made an attempt, but now with some profit taking in the market, we are seeing a bit of a breather. So in case the view is very short term, then 120 should be your stop, and close to around 140, 45 should be your target area. Similarly, like we were discussing about Mazgaon now, this stock has witnessed a very sharp up move in the last swing, close to around 1320 to 1740. It's almost a vertical move. So I would say that booking some profit around the current level makes more sense in Mazgaon. and wait for any consolidation around 1500, 1540 levels to re-enter.
All right, that's the view then. Another query coming in from Kamal wants to know your thoughts on Chennai Petro. If you look at this stock over the last 6 months, I think it has literally doubled. Do you see more upside, or do you see some bit of a correction coming in going forward, or how should one look at it?
So in fact, Nanta, it's on multi-year highs. So earlier also the stock had made an attempt to cross a sustain above 370, 400 mark, but it couldn't hold, and that was in 2017. And after that, we had a very sharp correction in the stock that pushed the stock in double digits. But now we are again seeing that stock is making an attempt, and in fact, it's holding above 400 mark decisively. But still, since we have already seen very strong up move, keep on drilling your stop losses in every rise because in uncharted territory, and we are seeing a bit of a profit taking in the broader market also, while the markets are seeing consolidation. So for Chennai Petrol, your stop should be at 404, and upside around, as per the consolidation, could be closer to around 490, 500.
All right, that's the view then on Chennai Petro. One more question has come in from Raghunath, and he wants to know your thoughts on HDFC Bank. Of course, we know that HDFC Bank now has more weight on the index. So, what are your thoughts on how the stock is looking on charts? After the delisting of HDFC and now the merged entity trading on the bourse.
So, another interesting aspect is that despite all the up move and recovery, we are still holding around the 2021 highs. So, if you see from the long term perspective, the stock has not done much. If you are holding this from last a couple of years, so I believe that in case of the Nifty has to inch higher and Bank Nifty has to make the attempt to cross 47,000 plus zone, then participation of HDFC, ICICI, Axis is something which is warranted. And HDFC post this, overall, volatility swings that we have been seeing in the stock, I feel it looks very stable around 1600 marks. So you should definitely hold. And I believe that this zone close to around 1590, 1580 is going to be the immediate support. So as a trader, your stop should be at 1580. But positionally, let's say if your view is for like 6 months to a year, then 1550 should be your positional stop. And considering the kind of consolidation that we have seen in the stock, positionally maybe 2000 plus is something that one should aim for. So overall, it looks positive. You can continue to hold, and from the short term to medium term perspective as well.
All right, continue to hold on to HDFC with a short-term to medium-term perspective. A couple of stocks I want to talk about is one would be the breakout stock Pages Networks. I mean, it's on a tear. Would you expect the stock to head towards, I think it's trading at somewhere around, 1 second, I'll just check the stock price. It's trading around 858 or thereabouts right now. Do you think, and it had hit a 50-week high of 880 or thereabouts, but would you expect levels of 1000 over the next couple of weeks? The way it has been rallying, I think over the last 5 days, it has rallied somewhere around 20% or thereabouts.
And that's right. So it's almost like up around 21% this week so far. Volumes are exceptionally high, and especially on the breakout days, so which clearly shows that the consolidation that we were seeing in the stock from almost like nearly 7-8 months has ended. And since the stock is also trading at the record highs, the upside is open. As per the consolidation range, the next stoppage should be around 1050, 1100. So yes, one should definitely hold this stock. 770 should be a stop, for the existing position, and you can buy fresh also with 770 as a stop.
All right, I think I'll just discuss the last stop that's on my radar this afternoon, and before we call it an end of the session, Delta Corp. Of course, there's news flow that GST Council will be levying 28% tax on online gaming and casinos, and Delta Corp, of course, over the last 2-3 sessions has lost somewhere around 30%. Today, it's attempting to make a comeback. But would you advise investors to steer clear of the likes of Khemka Corp and Nazara Tech at the juncture, given the fact that this is a blow for gaming and gaming stocks, and of course it poses a threat to their businesses going forward.
So yes, in fact, Nandita, in the last two occasions, when the Delta Corp tried to reclaim the record highs in the month of March 2022, we had a similar kind of decline, very sharp decline in the stock, and of late, from the last couple of months, it was making a gradual recovery. But this decline in this week so far, which is around 25%, and with very sharp volumes, this clearly indicates that the higher levels there's noticeable distribution that is going on in the stock. So I feel that's prudent to avoid in case if you're planning for any fresh positions. And for the existing traders or investors, you should maintain a stop at 160. Below that, the tone might change. In fact, trader can maintain a stop at 170 also, which was the previous swing low. And any rebound towards 200, 210 zone, try to exit this stock because it's likely to consolidate with the sideways to negative bias.
All right, so those were a few of the buzzers in today's session. But Ajit, before I let you go, any stocks that you're liking this afternoon? Any kind of recommendations for the short term for viewers?
Yes, so a couple of names which looks interesting, as in wherein despite the consolidation that we are seeing in the market, they are holding strong, and we have seen a fresh breakout. So one stock from the pharma basket is Granules. The stock has recently ended very narrow range consolidation and holding above the short term averages as well. So that indicates a positive tone to continue. So with the stock around 300, one can buy Granules at the current levels with 320.25 as a target. And we were talking about the mid-cap ID names. So Birla Soft, as we were discussing, still holds potential to test the 400 plus zone. So with stop of around 360, one can go long in Birla Soft also.
All right, Birla Soft and Granules, two stock recommendations from Ajit. With that, Ajit, thanks a lot for taking out time and joining in this afternoon. Well, with that, it's a wrap on this midday market mood check. Markets are in fine state, and we are knocking at that 19,500 mark once again. But it's a goodbye from me this Friday afternoon. You have a great weekend, and of course, I'll see you on Monday with midday market mood check. But don't forget to tune in at 3:30 p.m. when I get you all the market action after the market close. Till then, for all your other news and financial updates, stay tuned to me.